Good morning, everyone. Hope everyone is well, and I hope you can hear me loud and clear. But anyway, welcome to today's Zoom session. Welcome to another week of analysis here at Financial Hub. So today I'll be covering a few pairs. I wasn't here on Monday, so Monday I didn't do any analysis. So for those people who trade Aussie dollar, USD CAD, I think Aussie dollar I did for you an article. USD CAD I haven't shared anything just yet, but I'll share today what few perspectives I have. Thank you, Mike, for the thumbs up. So that means you can all hear me. And yeah, welcome to today, a new day, another day where we get to milk money from the markets if you're successful, or to accept your loss if you lose in a trade. Yesterday I had a trade running on Aussie dollar. I had an Aussie dollar long. I was squeezed out of that market, but still I'll show you an analysis I have. I still hold my bullish bias for now until a certain trend line that I'll show you on the chart is broken. So I still have that analysis still following, and I still have that flag formation. I think I shared that on the article I wrote on Aussie dollar, which was on Monday. I don't know if it was Monday or yesterday, but one of the two. So there's this certain trend line I'm watching. Until it's broken, I'll be changing my bias to longs. But before that, I'm still holding a long bias for market at least to shoot back up to 0.780 level. So yesterday I had a position. I was squeezed out. I think I lost about less than 1%. So I didn't lose much on that. So I lost about less than 1% of my account, which is not so bad. It was good risk management and that. So I'll do an analysis, then Ken as usual will come and do his pairs, follow up on Monday what he analyzed, and then we move forward to the next session. So I see Felix saying I missed on Sunday, expecting it's Monday. Cool. So let me get down to analysis. If you have any questions, please ask in the chat room and we'll be sure to answer. So if I share my screen, what are we looking at? I'll start with Aussie dollar and then we go further down to the USD card and another pair. So starting off, this is the pattern I have. This is what I shared on the article I wrote on Monday, and this is what I'm watching. So I'm watching the market moving further up, and we still have this trend line. So this is the trend line I'm watching. However, okay, I'm not strongly bullish for market to really rally up to the high side, because if you go back to the 1 week chart, remember I told you we have this trend line that we are watching. Okay, so let me just enlarge on this. So daily chart, we have this sort of trend line. Okay, so I sort of squeezed it a bit, but if I just make it a bit more clear, there we go. So I have this trend line. This is the trend line. So if you remember a few weeks ago, I had this other trend line. This was last year. This is the trend line that was broken, and we had a good analysis on that because we were looking at how market was coming up with momentum. So that's what I'm normally watching at times. I'm looking at how much volume is in the market, how much momentum is coming. So if you look at this other side, so these are the patterns I'm normally watching. You can see here there's a clear pattern over here. Market was coming to the upside, but sort of forming a wedge-like formation. There we go. So you can see that. So when something of the sort is happening and market is coming to an upside, approaching a trend line, it indicates that market does not have much momentum and there's likelihood for market to continue to the downside. So this is basically a correction pattern. So this is what we had in this impulse correction over here, and then we got that impulse. But when we came down here, market wasn't coming with that slowdown in momentum. So that was a clear indication that this trend line was about to be broken. So we got that break, retest, and market has been going further up. So I still expect this market, if we are to continue to move to the upside, I expect market to come up to 0.780, ultimately 0.80 level, targeting this trend line, okay? So this long-term trend line that I have, which started back in 2011. So since 2011, Aussie dollar has been in a downtrend, and until market reaches this level is where I'll be looking for more shorts. Okay, so if you go back to the daily chart, what I'm talking about, this is what now I'm watching as market is approaching that trend line, just like I've showed you on the weekly chart. We're coming in sort of like a pattern like formation. So this is the pattern that market is forming as we're coming up, and expect if market comes back to that level, then we can get shorts around this upper level, extreme levels. But for now, you can see I've even named over here Trendline Rejection. So I'll be watching today and tomorrow, and maybe also Friday, see how the market will close on a weekly time frame, weekly candlestick, as well as this rejection. We might reject this point again today and then move further up. So yesterday when I entered this trade, I think I had an early entry. So this is what I was watching. So you can see if I just zoom out, This is the trend line on the weekly chart. So you can see that first touch was down there, second touch, and this third touch, okay? So if I zoom in, the mistake I did, something that I normally like to pay attention to, I did not wait for the 4-hour candlestick to close. And if you're in the premium group, you always hear me indicating that it's clear to wait for the 4-hour to close before jumping in. But sometimes I normally take that risk and jump in before the 4-hour close, but I did not wait for that. So I entered around, there's a candlestick around this level is where I entered, and I had my stops at 0.7680 level. Market shot straight down, squeezed me out, and then we got this rejection. So today I'm still seeing if the market can still get that rally to the upside, respecting this channel this flag formation. If you know, I normally trade this sort of patterns: impulse, correction to the downside, and then that impulse to the upside. So I'm still watching this. If I go down to the 1-hour chart, I'm also watching a certain wedge-like formation. If market is able to break this level, you see this pattern-like formation, market can come. If we're able to break this level with momentum, then I'll be scaling into my position and going further up with this market all the way back to 0.780 level, which is, I think, about 200 pips or so from where we are, about 190 pips. Another thing that may occur is that this wedge may continue being respected. Let me show you. So what you can get is that market can still let me use this. Market can still drop back down, maybe get that third touch of the wedge, and then market to continue further up to newer highs. So that can still happen. But if this market breaks in with momentum, that's why I'm saying wait for this break to scale into that trade and push the market further up. So until that happens, I'm not risking, because market can still go down and continue going further down. So that's the analysis I have on Aussie dollar. I got squeezed out yesterday, but the week is not yet over. We normally say the battle was lost, but the war is not yet over. So that's what I have on this one. And if I go down to USD card, for my USD card traders. But before we go there, we can look at NZD USD. So NZD USD is an antipodian pair, just like Aussie dollar, and you can see that basically forming the same pattern. They normally follow the same structure that market is forming, because when it's easy to see Aussie dollar moving to the upside in the long term, it's easy to also see New Zealand dollar forming that same direction in the long term. At the very moment, you might find that maybe they're moving opposite direction because of one of two things, but ultimately they're normally moving in the same direction. So that wedge-like pattern we've seen on Aussie dollar, this is the same thing that we're seeing on New Zealand dollar. And why it's sometimes nice to look at these pairs, because you can get to see which one offers a better pattern formation. So if you follow patterns or such, you can see, either look at Aussie dollar, see if it's offering a good pattern, or New Zealand dollar, and then know which pair to trade. So this one, what we've been having, market was moving to the upside. I've not done deep analysis, but what I'm just watching, we got into this sort of like sideways movement. Market has been in this correction, so an ultimate break to either side is imminent. If market is able to break to the upside, then this one can continue further up, just like Aussie dollar. However, if market is able to come back to this level, get that rejection again, we can see market come back down all the way to this trend line before we get those bullish moves. Okay, so if market is not able, if I zoom out, we'll just come back. Let me go to the 8-hour chart or daily chart. Let me use the daily. So if market is not able to break that ranging level, it's so easy to see market come back, get this third touch of the trend line before we get that push to the upside. So that's what I have on New Zealand dollar. I don't know if many people trade this pair, so that's just what I was looking at. But if I go to USD card has been forming sort of ever since we got this breakout of this wedge we were looking at a few weeks ago. So this is the triangular, this is the channel we're watching. Ultimately we are looking, if market is continue to the upside, this is the target we're aiming for. Okay, this is the target we're aiming for, but sort of we're seeing this sort of like pattern over here. Market broke out, and maybe we might get this retest of this level before we go further up. And if you look at the daily 4-hour chart, this is what I'm talking about. What basically happened, what is holding the market, we had this wedge-like formation, market broke out, held by 78.6, and market started forming sort of like a triangular formation. So if you were watching yesterday, this pattern over here, whenever market is moving in a sideways movement, always try to break it down and see what pattern was forming. So over here we had a triangular formation. If I go to the 1-hour chart, Basically, you can see that market was sort of forming this pattern like, and then yesterday we had a strong momentum to the upside and a strong rejection, market closing back down and then falling all the way down. So market had that breakout, we might get that retest of this level, and then market to go down to get that retest I'm talking about on the 4-hour chart before we get that bullish move here. So I'm talking about this. If market is able to get that rejection, we might come back down, maybe get a retest of this level before the market continues to move to the upside. So that's what I'm watching. Ultimately, this one I'm still very, very long in the long term for market at least to finish that pattern that we're looking at on the daily chart. So this pattern is what I'm talking about. I'm waiting for at least market to shoot all the way back up to that level before I'm looking for any shots. So that's basically what I have on this one. I leave the floor to Ken to cover the rest of the pairs. But those, if you follow my analysis, those are the main pairs I'm normally watching and doing for you people a deep and good analysis. Right? So I hope you've enjoyed that, learned a thing or two. I leave the floor to Ken, then we'll answer the questions right after the meeting. If maybe you've entered this Zoom meeting late, we'll put it on YouTube today. So we're back on posting on our YouTube channel. We'll put the analysis there on our Wednesday technical breakdowns. So that's all I have for you guys. Peace.
So hi guys, hope you're doing well. So it's on Wednesday. On Monday I did a couple of breakdowns, talked about specific markets like gold. We also did some articles which we shared, and I've also been posting on the premium group on some of the markets I'm watching, some of the setups I'm watching. So today I'll just go through a recap of some of the markets I'm watching, what I'm expecting to happen in most of these markets. Some of the setups I have, like gold, I think there's a high chance that gold could sell off big time, about 1,000 points to trade as low as 1,700 before we establish the bottom of the year, which I think will be around that zone before we start the next bull leg. On oil, I think there's also a high chance that there is a big collapse coming. I'll share with you my reasons, and then you'll incorporate that with your own analysis and your own decision making strategies. Then you can arrive at how you make decisions. Currently I'm holding only 2 positions. I have one oil short position that I'm holding. I also have a position on, I have 3 positions. I have one on oil, one on Dow Jones, and one on GBP JPY. I think there's a good opportunity on gold, but unfortunately my risk is tied to those positions, so I can't easily just execute other positions unless I liquidate some, because I have specific rules that I use on how I manage my risk and the account volatility that normally happens when you don't manage your risk well in your accounts. So I'll just go down straight to the chart breakdowns. If you have any question, please post it in the chat room, then I'll look at it if I have the answer. So I'll start off with, let me start off with gold. I think gold is quite interesting. So this is gold. Let me just start off from the weekly chart. So some time back I pointed out that I still thought that gold had not yet established a bottom. Why? Because I thought it made sense to me that if this market was going down, then we had to find some support at some crucial level. And the best level for me for an entry was at the 1700 level after a bounce of this trend line. That would make more sense. It would fit in with the 61.8 fib retracement, and at the same time it will squeeze out most of the potential longs which have already been executed, because not everyone trades like we do in a short-term perspective. You should also think of the long-term investor. Most of them also can't handle a squeeze to 1700. Since most people make decisions emotionally, they'll tend to exit some of these positions instead of thinking of this as a better price. So looking at this, I think the 61.8 level, which points out to 1710, 1700 level, is a good buy level, a good bottom level for the market this year. And I think there's a high chance that markets could come back down to that level based on the weekly chart. In the daily chart, my idea is supported quite well with this significant downward channel. So you can look at this like a technical correction for this big bull move that you've gotten since last year. You can see clearly you had the first move, a consolidation, a drop again, a pullback, a significant drop, a pullback to the same level we had last year. Then we started this drop before we had a consolidation again. So looking at the charts, looking at yesterday's price action, I think I can point out that gold could sell off pretty fast to these levels. I think the last sell-offs are also quite aggressive, and you also need to be quick on your feet if you're going to execute certain positions. Looking at it from a 4-hour perspective, clearly this was a drop, a flag correction, or rather a flag formation, and then now we are getting a continuation to the downside. First target comes in at 1810. If you don't have a position, I think this is a good one to try your risk in. So you can see, like I was looking at it, looking for the markets to come back down to trade lower is 1810, and that could happen probably even before the end of today. So that's about 250 pips from where we're currently trading. With your stops at 1850, you'd have a good risk reward ratio, but it's wise for you to wait for London open. I think it's only about 23 minutes to London open, so let's wait and see if we get a better price, but I think the direction is almost 70% to the downside. So that's my outlook on gold. Let me now look at oil. So I think oil is also quite interesting. So let's look at it again from a weekly chart perspective. So looking at it from a weekly chart perspective, I remember on Monday pointing out that clearly we had gotten 3 weeks of consolidation, and that meant that there was a very high chance that this market could collapse lower and move lower. But clearly we never got that. Instead we got a short squeeze. I'm looking at this as a short squeeze. First of all, how I know it's a short squeeze, the faster market moves, the faster you can know that people are probably caught on the wrong side, and it's more of a liquidity hunt and many other things. If you've been watching markets for long, you can tell that. But anyway, you can see clearly we had a consolidation here, and then had these last 2 days of quite aggressive bullish momentum, taking us to the 55 major level. 55 level is a crucial level in this market, and I think there's a high chance that markets could now potentially sell off big time. So I think the more rubber band is stretched, the higher the probability of the trade. I just look at it in that direction, in that dimension, and looking at the markets from that perspective, we had this move, a correction, and now we've gotten this huge move from 35 now to 55, about 2,000 points now to the upside. No significant correction for the last, I think, about 3-4 months, starting in November, and now we're trading at 55. I now think that we're getting closer to the top, so I've lost a couple of times trying to get this short. So I was short at this point, never got it. I was short at this point, never got it. But if I get this one, I think it will be enough for me to make back what I've lost and recoup my losses and make some gain on that market. Anyway, from now on, I think for the next 1 or 2 months, I'm planning to trade oil on the short side, especially if we get good signals. So I'm already short on this one. I executed a short position, immediately go to the $55 level. I just think this is a normal short squeeze again on a Monday, on a Wednesday morning open. So we're just going into London open. You can see markets have opened sharply higher, and we are going to 55.2. We could even come back to the extreme of 55.7 before we start the collapse, but immediately it starts, that's when I want to be making my money. But if we break above 56, I think now I'll have to try and watch what the markets will be doing. But I think these zones, I wouldn't want to be a seller again. I wouldn't want to be a buyer. I'd rather be a seller. I don't think I'd execute any buy position currently without any correction, at least knowing how markets work. So that's oil. That's my outlook on oil. Then I look at the Dow, which I think is quite similar to oil. So looking at it also from a daily perspective, last week this one had a huge sell-off. So we had a sell-off starting off at the 30,123 level, and you can see the sell-off. I'm thinking of these last 2 days as a correction, and if I go down to the 4-hour chart, clearly you can see that the markets went down lower, and now we are going back higher. If I go back to the hourly chart, I have this sort of a channel formation that I'm watching. I'm trying to see if this level will hold 30,850 level, which is also the 78.6 fib. If it holds and markets start selling off, and I'll sell this one quite aggressively. So I've started with a small position, but I'm intending to build it if we can get a good signal at this level. So I'm waiting for London to see how London will react. 820, 850, then I'll know how to position myself. But this is the idea I have. I think markets will ultimately sell off, continuing this pattern of lower highs and lower lows that has been forming for the last couple of days if you've been trading this market. So those are the three main markets that I'm watching. I also have a short position on GJ. So this was the position. You can see at this drop and then this drop. But now clearly it's heading to London. We're kind of getting a reversal. If we take over this level, the level that I executed this position, I think that will be a break-even trade for me, and I'll exit the market. But if we get a rejection and we keep on moving lower, then I could hold the trade back to 142.9. But that's the trade that I'm holding. So I don't trade this market a lot. Just started looking at it recently, but there was this beautiful setup which I thought it was wise for me to execute. So those are the setups I have for now. If there's any question on the chat room, I'll try and answer. Hopefully I've not been too fast for most of you guys, so you've been able to at least understand what I've been going through. And if you have any question, we'll try and answer. So someone is asking what size of accounts are we trading, because we are funding people. I don't think it's really important for us to focus on what account size we are trading, because much of that I think is private. So I think what's important is for you to focus on the outlook we have on market, how you manage risk and certain things. How much you are trading is not really important, at least for now. So for that one, I'll give it a pass. I won't try and answer. Do you have a PDF for your book? What are the materials? So yeah, we have a PDF for a book, but you still have to pay for you to get it. We do have courses. Those are the other materials that we have. So you can come in here for sessions, at least 2 sessions every week. We have different packages depending on which one you choose. And I think that's the only way we can help you. At least first time joining in this year. Okay, so we thank you, Akili. Hopefully you learn a bit from us. We'll catch some of the moves that we are planning to catch in the market and make some profit. So I think I'll stop there, and we'll see you guys on Friday. For those of you who will love to repeat this session or to grasp some concepts, you can check out this episode on YouTube, which will be uploaded in a few minutes. So someone else is asking something. So hi guys, hi Maestro. If you have anything, you can ask us. If you don't have anything, we are quite well, doing well. So we'll see you guys next time. So about working for the team, once we are recruiting people, we'll contact you, and then you can come in and do some jobs for us. But for now, we don't have anything that we'd love to delegate to you. But once we are ready, we'll tell you, which is quite soon. So we'll inform you when that time comes. So that's it from me. I'll see you guys and catch you guys in the next one.